What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. And this video is going to be a little bit different than what we usually do. I know I say that often, but we're always trying new things. And right now, the world is in a very big crisis in regards to obviously the major news with the illness going around, but also with the markets falling in complete free fall. And we've noticed a lot of things going on in regards to debt, money printing, and I wanted to take a step back and kind of go through what money is, what all this repo stuff means, and how our banking system has been, and what our banking system just turned into overnight. And I don't think people really realize what actually just happened. And it was the biggest event that we've seen in regards to banking in a long time, and it really happened in the midst of a crisis. And I wanted to show that to you. Here's an article from Reuters. New York Fed says it will offer 1 trillion in daily repo operations for the rest of the month. The Federal Reserve Bank of New York said on Friday it will continue to offer 1 trillion a day in overnight repo operations for the rest of the month, with half of the support being offered in the morning and half in the afternoon. All right, so what does that mean? They're going to, 1 trillion in daily repo operations. So what that means is that they're going to lend money to the bank overnight. So in the system that we've had for a long time, we have something called a fractional reserve banking system, and that's where banks can lend out money based on how much money they have on hand. Now we noticed that this lending or this overnight lending started turning into chaos back on September 16th. You can see that right here, September 16th, repo markets chaos signals Fed may be losing control of rates. And we noticed that the Fed issued out $50 billion starting on September 16th. There was a lot of events that occurred right after this that was very suspicious. On September 18th or September 19th, just a couple of days later, the federal chairman, Jerome Powell, came out and spoke and did a press conference. He was asked about why are you guys, issuing overnight lending? What is going on? Because why are banks needing money overnight? What is happening here? His response was, oh, it was no big deal. They had to pay some taxes and it's nothing that we have to worry about. We're surprised that the market was even really worried about it and brushed it under. Very shortly thereafter, just a few days later, news headlines got dominated about the impeachment inquiry that was presented by the House of Representatives. So it got swept under the rug and all of the headlines became about impeachment just days after it began. And every single night they continued lending money to the repo market or the overnight lending market, 50 billion to 100 billion. And it started on September 16th and it never ended. Why were banks needing all this money overnight? And it has to do with them not having enough cash on hand overnight to satisfy the fractional reserve banking requirements in order to have outstanding loans. The way money works, or the way that the banking system works, is that banks don't have to actually have all the money on hand in order to lend out what they have. For example, there's a video called Money as Debt. If you have never seen it, you should, and maybe later today I'll share that on my Twitter page. But the idea of how it all began is that when we all used to barter and trade using gold, it became a point where the gold would go sit in vaults and somebody would hold on to it. A goldsmith would hold on to all the gold and he would write notes for it. And people would use these notes to exchange with each other rather than actually using physical gold to exchange with each other. So the gold sat in a vault and the notes were exchanged in commerce rather than the physical gold. Eventually, the goldsmith realized that, hey, nobody ever comes and does a run on all the gold. Nobody comes in and actually takes all the gold. So why don't I just issue out additional notes and no one will really ever know? So the goldsmith issues out double the amount of notes based on how much he has sitting in the vault. And it doesn't really matter because no one ever comes in and runs on the gold. They just leave it there. It's heavy. They don't care. They know it's safe in there. And eventually more notes get created, more notes get created, more notes get created, and all of it is completely fine as long as nobody does a run on the goldsmith and takes all the gold. Then nobody ever knows that it ever happens. So you have way more gold notes floating around than actual gold sitting sitting in the actual vault. That is how our system works currently. However, it operates entirely on debt. Right now, we have a fractional reserve requirement. Well, we used to. And the idea was if somebody comes in and asks for a $10,000 loan, the $10,000 loan would be given to the customer. The customer would go buy a car and hand that check over to someone else. Someone else would deposit that $10,000 check, and now that bank has fractional reserves from that deposit and can now issue out a $9,000 loan. That $9,000 loan gets sent out, gets deposited at another bank, and then an $8,000 loan or an $8,100 loan can be written based off that. And it just keeps getting smaller and smaller and smaller. And from the initial debt that was ever created, you can make up to $100,000 worth of more debt. However, just a couple of days ago, on March 15th, the Federal Reserve actions to support the flow of credit to households and businesses. All the way down here, reserve requirements. For many years, reserve requirements played a central role in the implementation of monetary policy by creating a stable demand for reserves. In January 2019, the FOMC announced its intention to implement monetary policy in an ample reserves regime. Reserves requirements do not play a significant role in this operating framework. In light of the shift to an ample reserves regime, the board has reduced reserve requirement ratios to 0% effective on March 26th, the beginning of the next reserve maintenance period. This action eliminates reserve requirements for thousands of depository institutions and will help to support lending to households and businesses. So what does that mean? That means that banks no longer have to have any money on the books in order to write new debt or create new money. The overnight lending that we're seeing is money being given to the banks, being borrowed overnight in order for them to meet the reserve requirements for the outstanding loans that they currently have. And right now, the banks don't have any money. Hence why we are now at $1 trillion a day when we used to be at $50 billion a day back on September 16th. And prior to September 16th, we were at $0 per day. So something has occurred that has made it to where the banks have run out of money. Now, one could argue that there's a run on cash right now and people are taking all of their money out of the banks, so the banks don't have any money left because customers are doing a run on the bank right now. So they're having to go to the overnight lending market in order to get cash, in order to hold it overnight to meet the reserve requirements, and everything is dandy. But isn't that crazy in itself, right? The bank actually doesn't even need to actually ever have any of the money as long as they tap into the reserve, as long as they tap into the repo market, borrow the money overnight, then repay the money back the next day, then they never even had the money in the first place and it was no big deal. So this whole system is crazy. But we are now going to where we will have no reserves whatsoever and banks can print money at any rate that they would like to. And we have also gone down to a 0% federal funds rate. I think I looked at a mortgage rate right now is like 2.5% for a 30-year loan. It's ridiculously low. It'll likely go even lower. So let's read real quick on what is the repo market and why does it matter. The Federal Reserve uses repos and reverse repos to conduct monetary policy. When the Fed buys securities from a seller who agrees to repurchase them, it is injecting reserves into the financial system. Conversely, when the Fed sells securities with an agreement to repurchase, it is draining reserves from the system. Since the crisis, reverse repos have taken on a new importance as a monetary policy tool. Reserves are the amount of cash banks hold, either currency in their vaults or on deposit at the Fed. The Fed sets a minimum level of reserves. Anything over the minimum is called excess reserves. Banks can and often do lend excess reserves in the repo market. What happened in the repo market in September of 2019? The repo rate spiked in mid-September 2019, rising as high as 10% intraday, and then financial institutions with excess cash refused to lend. This spike was unusual because the repo rate typically trades in line with the Federal Reserve's benchmark federal funds rate, at which banks lend reserves to each other overnight. The Fed's target for the Fed funds rate at the time was between 2% and 2.25%. Volatility in the repo market pushed the effective federal funds rate above its target range to 2.3%. Okay, so what we're saying here, if you kind of caught all of that, is that what will usually happen is that a lot of banks don't seem to ever actually have the reserve requirements that they need, but there are other banks that are in stronger positions and do have excess funds. And those banks will provide those excess funds as repo loans to other banks so they can meet the reserve requirements. And it's normal. These banks all do that with each other. They're all buddies. They say, hey, man, you need to borrow the money overnight to meet that reserve requirement. Here you go, borrow this money. And then they'll pay it back and everything is hunky and dory. They try not to get the Federal Reserve involved in it because, from what I've read, whenever it becomes apparent that you're having to tap into the Federal Reserve, it means that no other banks actually want to help you anymore. There's something very wrong with your bank if you start borrowing from the Federal Reserve. Why would no other bank want to loan you money? Something must be very seriously wrong if they don't want to let you borrow money overnight. So that's what we saw happen on September 16th. For some reason, someone or several people needed to tap into the Federal Reserve. There wasn't enough money amongst the other banks in excesses to be able to share it overnight in an overnight repo, or there were banks that were not creditworthy enough to be able to get the money from the other banks. And the only option they had was to go to the Federal Reserve in order to satisfy the reserve requirements they needed in order to maintain the loans that they have. So we watched this behavior continue since September 16th, 50 billion every single night, then 100 billion, then back to 50 billion, then 75 billion, then 100 billion, then 50 billion, and we watched this continue since September. For some reason, some banks were unable to maintain the reserve requirements for the outstanding loans that they have. This continued all through 2019 and into 2020. And once the stock market started falling, we noticed that the repos got bumped up to $150 billion per night. And then this past week, we went up to $1 trillion per day. The fractional reserve banking system failed this week. As I mentioned, I go into banks all the time and I ask them all. I mean, it's part of what I do, right? I'm here, I'm making these YouTube channels. I'm going to relay the information that I can get to you guys. And I ask all of them, hey, so how's it been? Has it been pretty busy? Yeah, it's been really, really busy. I'm like, oh, wow, cool. Have you guys gotten any cool coins, like from people like dumping their stuff, needing cash or wanting to put money into their deposit? Like anybody dropped off any $50 lately? Same story every time. No, we haven't gotten anybody dropping off that kind of stuff. It's just people coming in here to get their money out. The banks are at a point where they cannot meet their fractional reserve requirements anymore, and we have ushered in a new banking system. For many years, reserve requirements played a central role in the implementation of monetary policy by creating a stable demand for reserves. In light of the shift to an ample reserves regime, the board has reduced reserve requirement ratios to 0% effective March 26th. There is nothing in here saying that it will be like from a certain period to a certain period. It's no. We just went from a fractional reserve banking system to a no reserve banking system, which means that banks can print money in unlimited quantities. This is a video that's been out since 2009 called Money as Debt, and it is fantastic at explaining all of these things to you and how money is just created out of complete thin air. And it's created by making more and more debt. And what's been crazy is that we've been able to create all this money out of complete thin air and make tons of it by using the fractional reserve banking system. And now we've just put it on steroids and took away the fractional reserve requirements, and it is now a no reserve requirements. And I highly recommend that you go watch Money as Debt to get a better understanding of how the whole system works. It's 45 minutes long, but it will give you so much knowledge in that 45 minutes, your mind will be blown. It really breaks it down very simply and explains to you exactly how money is created in our current times and how it used to be. It shows you the transitional time period of how things changed and explains it in a very easy to understand manner. It has illustrations, it shows you exactly how they did it, and then at the end it shows you there's no option for this. The only option for this at the very end is that there has to be a switch to a new type of banking system or a new type of money. And here we are in 2009, and it's saying a new type of digital money. Now, I didn't show you this video because of the digital money part. That was just something that blew my mind near the end when I saw them say that. I'm like, oh my gosh. But I've known about this video for over a decade. But money is completely created out of thin air. It's made out of absolutely nothing. And there has been restraints on which the rate at which it can be created out of thin air. And that was by using a fractional reserve banking system. And we had reached a point now where we even bypassed the fractional reserve system. The fact that there even is a repo market, the fact that banks can tap into an overnight lending market to hold on to cash overnight to meet the reserve requirements, we were already bypassing the fact that there was a reserve implemented in the first place. And right now, we just took away the fractional reserve requirements, and money will start getting created out of thin air at an absolute exponential rate. So as we all sit in these digital assets or in precious metals or whatever you're in to hedge against the dollar, you have to say to yourself, what actions are being taken right now that lead me to believe that the dollar is going to have significant inflation? One, we're going to be bailing out companies and printing money out of complete thin air with the Federal Reserve. And two, we're allowing banks to be able to print money on demand with no requirements, just free printing press at each private bank. If that doesn't tell you the story that the dollar is going to hyperinflate, then you need to go watch this video. Money as debt. So that's going to wrap it up for this video. Thank you guys so much for watching. Please like this video and give it a thumbs up. As always, this is not investment advice and I am not a financial advisor, but if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. And let me leave you with something else. This is David Rockefeller, and Rockefeller was the CEO of Chase Bank. He was controversial, he had a big personality, and a famous quote by David Rockefeller: "For more than a century, ideological extremists at either end of the political spectrum have seized upon well-publicized incidents such as my encounter with Castro to attack the Rockefeller family for the inordinate influence they claim we wield over American political and economic institutions. Some even believe we are part of a secret cabal working against the best interests of the United States, characterizing my family and me as internationalists and of conspiring with others around the world to build a more integrated global political and economic structure. One world, if you will. If that's the charge, I stand guilty, and I'm proud of it."